But I want to ask you about Apple, because you have
Sure.
a really good analysis of what's going on right now. And you say that Apple and its supply chain are likely to struggle as replacement rates lengthen for smartphones. Yesterday we saw a problem. As soon as you said, we talked yesterday about what we were going to talk about today, and then I look at the market, and exactly what you said was happening yesterday in the market in terms of Apple.
Yeah, I mean,
tell me what happened.
Well, I think the main thing with Apple is, if you think about the smartphone industry, it's really gone X growth. So if you look at this back in 2014, the industry was growing over 30% a year. This last quarter, smartphone growth was actually slightly negative. So you're going to negative growth. You've got Apple stock up about 25% year over year, but you have replacement rates getting much longer. So it's a lot like what happened to PCs. 2011 was the last year PCs grew, and then the amount of time between replacing the phones, the PCs continued to lengthen. The PC industry hasn't grown since 2011. I think you're starting to see that it's going to occur in the smartphone industry coming up. You're selling 1.5 billion smartphones every year, but I mean, you've talked about it on air.
Yeah.
You hate your 10, right?
I do.
I mean, the facial recognition works half the time for you.
The camera's on all the time, and it's just, I don't like it.
Yeah, I mean, I went in and actually got my iPhone 6. I got the battery replaced. My entire family went in. 2 of us needed new batteries. The phones are like new. That's $29. It's a lot better than paying $1,000 for your iPhone 10.
So you just change the battery. You think that's what people are going to do?
And I think a lot of people are doing that because, you know, why are you going to move up just for the facial recognition? So it's not that the phone isn't going to get better every year, just like PCs for the last 6 years have gotten better too. But as people go from replacing their phones every 2 years to potentially every 2.5, 3 years, that's going to cause a major problem, and Apple can't get through that. It's very, very difficult, especially when you say, well, we're not going to do any internet advertising, you know, and that's a very high profit margin revenue stream that we've seen the TV industry do, the radio industry do, you know, and obviously the internet companies.
Apple is going to be reporting its numbers in May. I thought it was really interesting what you were predicting. You think Apple's going to miss, but you still think they're going to raise their dividend.
Oh, yeah.
But you think there's going to be a miss on Apple.
Yeah, and this was, as you said, I was talking about this before yesterday and what happened with TSMC. But yeah, I think you're going to have a problem with the units, the high-end units, which is where a lot of their profits are. And then I think looking forward, what you're going to see as you get towards the new holiday season is they're going to start pushing some of their lower price phones. So the average selling prices are going to start to drop. And the profitability is going to be an issue. I think when they report, it'll be interesting to see what the stock does because they have $260 billion in cash offshore. You know they're going to raise the dividend. You know they're going to raise the buyback. Does that provide a temporary lift to the stock? Maybe. But I think after that, they're going to have a lot of tough sledding over the next several years as they fight the industry.
Maybe they offset the miss that we're going to see in May with this news of, hey, we'll raise the dividend, hey, we'll buy back the stock.
Yeah.
It's still going to be a miss.
Yeah, and I think the thing is that for a day that might be really helpful.
Yeah.
But at the end of the day, you buy a stock for its future earnings stream.
Yeah.
And if you think that future earnings stream is going to be way less than what people are forecasting, it's not a good stock to own. I mean, I think it's a great company. I have tons of Apple products, so do you.
I know, yeah.
But it doesn't make it a great stock, and I think people get confused. There's 44 analysts, last time I checked the cover Apple, not a single one of them has a sell rating on the stock, which tells you how uniformly bullish everybody is on it. And when you have things leaning in one direction, that's when problems start. You talked about GE earlier. Obviously, that was a darling stock. Hasn't done so well over the last couple of years, has it?
Hasn't done well at all. All right, let me switch gears and ask you about Facebook. This was your #1 holding.
Yeah.
It still is your #1 holding?
Yeah, it's actually one of our biggest still.
Okay, so lawmakers are urging Silicon Valley companies like Facebook to make advertising more transparent in the wake of the Cambridge Analytica scandal. You actually sold the stock, but then you bought it back. Tell me your position on Facebook right now.
Sure. So when this whole supposed data breach came out, we sold the stock. We hedged it out, actually. It was above 170. When the stock dropped below 160, we started buying it back. When it got to about 150, we really bought, and we are actually much bigger now than we were when we got out of it in the 170s. But, you know, for us, think about what happened. Did anybody open up credit cards in your name? Was there any of those issues you saw with Equifax? No. What probably happened is maybe you got a Donald Trump ad. Really? That's the worst that happened. But, you know, it's an election year. The politicians are going to make a big deal of this. Don't get me wrong. You know, data, privacy is a big deal. But don't forget, the TV industry has been built on advertising to people, knowing things about the demographics. So I think Facebook will add those controls or move them up. I mean, you already have a lot of those controls. Just people don't use them. And I like getting targeted ads. I'd rather get an ad for something I'm interested in than for something completely random like, baby food when I don't have a baby.
Right.
For me, I'd rather see tennis ads.
But, it's not just getting stuff from Donald Trump. I mean, when you look back at the Barack Obama election, it was the same thing. I mean,
Totally.
You had the same thing where you had people's, data being used for political purposes as a result of any changes they make in being more transparent. Does that change the fundamentals of how they make money, and does that change the reason to own this stock?
No, I don't think
You don't think so?
I don't think so at all. I mean, think about it this way, right? Google, back in March of last year, they were showing ads from companies next to extremist videos. That's bad. Procter & Gamble does not want their ads next to extremist videos for diapers and baby food,
good
etc.,
point.
right? That didn't affect their business one iota. This isn't really going to affect Facebook's business, in my opinion, very much at all. Obviously, they're going to be more transparency with ads. I think that's a good thing, but I really don't think that's going to change the trajectory of the business. They've already said they're going to spend 45 to 60% more this year in expenses to go ahead and do a better job with this stuff.
Yeah.
That was before this whole data breach stuff happened.
And when you look at valuation, I remember you saying to me, look, you'd rather buy Facebook where it's trading now versus, for example, an Amazon, which is trading.
Yeah,
Why? Tell me the numbers.
Facebook. So if you look at the market, the S&P is trading at 17 times. Facebook is trading at 19 times earnings, growing revenues at 35%. Amazon's trading at 100 times. They're growing their revenues at 30%, but that includes Whole Foods. You back that out, it's in the 20s.
Huh.
So, and Amazon, by the way, last year, their margins were in the single digits. Facebook's operating margins are at 50%, 50. So you think about a company that's massively profitable, that's got an incredibly low valuation, and more time is being spent on the internet, right? On Facebook, on social media in general.
Yeah, but real quick, I mean, there's a new scrutiny on all of these companies, right? So
yes,
does that
definitely.
change the reason to own tech?
No, because, I mean, here's the thing, right?
I mean, we haven't seen Google, all these companies with all this data. All we focused on was Apple. What about, Alphabet?
Well,
are they going to be in the hot seat next?
I'm actually concerned about Alphabet when they report their quarter because I think people have mismodeled expenses. So for Facebook, as I said, people have expenses for 2018 up 45 to 60%. For Google, they have the March quarter expenses, I think, modeled way too low. So it's actually not going to surprise me if Google comes out and misses their March quarter on the earnings per share line, even though the revenue should be fine. So, yeah, I think we've spent all this time focusing on Facebook. There's risks to some of these other names. But in general, I mean, Google's trading at 21 times earnings. It's growing the revenues at 20%. Over the longer period of time, I think they'll do well also. It's just in the short term, I think, there could be a profitability issue with them. Don't forget, their margins, gross margins, have been down year over year for well over a year because of some of the issues going on with traffic acquisition costs, et cetera.
Dan Niles, thank you so much. You heard it here first. Google and Apple may miss.